Aloha Internet. Welcome to the Stock Market Show Bubbles closing edition. The stock market's going to be closing down here in about four-ish minutes. Wednesday, October 15th, 2025, 3:56 p.m. Eastern Standard Time. You know where there's a bubble? I'll tell you where there's a bubble. There's a bubble in news headlines. It's bubbling. And look at all this. And this is not even like a news system. This is a brokerage account, and it's just bubbling over with news here. All types of news. There's a bubble in the news market. Let's take a look at the financial markets. Bitcoin overall down, oil down, silver up, gold up, the dollar a bit down, and the stock market indices overall up, but not too surprisingly, kind of stuck in this sideways bit of range here, stuck in this price movement here. The VIX volatility on the stock market increasing over here on the futures. Let's see if we have the MAG 7 stocks around here. Here we go. Let's pop open Apple 3-month time frame. Apple, we see kind of still trading, not surprising, kind of sideways inside of this big drop here. And then we have Amazon. And Amazon, we are still on the bottom of this channel, sideways channel it's been in. And then Microsoft. Microsoft is sideways, catching a little bit of support around this 200-day moving average, but it's having a down day, and it's still sort of in the 50% mark, lower 50% mark of this big down candle. Nothing to be surprised about. Pretty big down action on Nvidia, hovering around that 200-day moving average. Netflix is on the bottom half of the 200-day moving average right now, and we will see how far it's going to drop. It looks like it's starting to catch a little bit of support here by this, I guess, a 10-day moving average over here. And then Meta is it's dojiing. Like we see it going from red to green, or we we did. I saw it. So now it's going up, but that's almost the doji. It's right in there, definitely below the 200-day moving average, getting some support around that 10-day moving average in this price congestion right here that we've seen it in before back here. All right, so that's all right. Here's some upward momentum. Look at this, nice upward momentum. If you kind of can remember how it went flat, it like popped up, it came back down, kind of went flat, it popped up, came back down. Sometimes maybe it didn't go flat, it went flat a little bit here, popped up, kind of went flat through here, boom, popped up. Remember that. Remember that and look for that in other places. All right, is that all of it? I think we went through all of them. That's all seven of them. So we're still kind of doing a little bit of a sideways shuffle in a way. Let's take a look at, instead of just the MAG 7, how many ever stocks all these are. We got the NASDAQ, the S&P 500, the Dow Jones, the Russell. We have the volatility on those. We have the future volatility. And then we have all these different sector ETFs. Before we do that, I made this for you. I pulled up this for you and myself. I already had this somewhere else on paper, but I put it down here. So these are some fundamentals. These ones right here are the MAG 7, all seven of them here. And then I have, I think, 6 different stats here: PE, PEG, enterprise value to EBITDA, gross margin, operating margin, profit margin. So this is as of fundamentals, as of, put a date somewhere. How about right here? Seems really easy. 10.15.25. Okay, perfect. So we'll look for changes, but overall, what do we see? Really, really quickly, let's get to the bottom line. Profit. Bam, Apple almost 25%, Amazon almost 11%, Microsoft almost a little over 36%, Meta almost 40%, Nvidia almost about 52.5%, Netflix 24, almost 24%, Google a little bit over 31%, FCX a little over 7%, MO a little under 60%, and Coca-Cola a little under 26%. So is MO taking the profitability cake here? Let's see. Look at that. Where is, oh yeah, Nvidia at 52. It's like that's it, and the total profit margin. But these numbers are kind of it's good to know if a company is profitable or not, because if it's not, then you would handle it differently than if it is. And if it is, like how profitable is it? And there's a lot of different things to consider. But at least we have some metrics to go off from. Now we have a date, the mid October. Now sometimes before price moves on charts, sometimes before price moves on charts, we might be able to see prices moving or numbers changing here, not on a chart, looking at different type of statistics and indicators, giving us an idea of the health of a company. For example, let's say if one of these companies we notice its profit margin starts sliding down where it used to be almost 40% and now it's almost 30, like 27 to 30, then we see something's going on in the profit margin. We can kind of look into the company health and look to see what's going on. That's one way. Or even if you don't plan on buying any of these are like bellwether stocks. If they're losing profits, then maybe it's a bigger indication for the U.S. whatever companies. There's a lot of different ways that you can make information work, but we have to have some information out there here. So we'll be working on all the different ways we can put this information to work. So PE, I think across the board, 25 is sort of like average PE for all stocks. Not, you kind of just lumping all the different sectors together. PEG ratio, I think that close to one or at one, below one, I think is getting to be a good number on the PEG. I could be wrong on that one. One that I'm spot on is enterprise value to EBITDA. 10 or lower is looking to be a good deal on that metric. And then we went over the different profit, went over the margin stuff here, gross, operating, and profit. I added at first I just had gross and profit. I figured, the big number, the end number, and then I think I had heard somewhere that Warren Buffett's operating margin is the most important margin, so most important number or metric in a stock. If that's true, I figured, what's the extra work? I might as well just add it just in case it is, and if I find out that it's not really what he said, or it's not really working for me, or I'd find out the operating margin isn't what I want to focus on, then I'll just take it out. But adding it for the moment. Okay, so we got that put together. We're going to reference that at some other episode, some other day. What else? Did we look at all the sector ETFs? We can go through those relatively quickly. Oh, the market has closed. We are 5 minutes past the market being closed. I have those notifications turned off on my particular one because I don't really want to hear that dinging sound breaking up my focus. Okay, how did the Qs end? We're going to maximize these, and these are 1 year charts, so it really kind of makes reading the smaller candles or these candles. Sometimes we want to pull them in, but I think we're going to see kind of a lot of from this big drop on Friday. I think we're going to see quite a few with having like inner bar action here, which is what we're seeing over here. Yep, same thing with the S&P 500. Sort of the same thing with the Dow Jones, except for the Dow Jones price action is higher, is almost to the top of, well, it is around the top. It's in the top 50% of this big candle here. You could say it's taken 3 days for it to kind of get trade back up here, where these two, uh, it's making it. It might. I wouldn't be surprised by the end of the week if we at least see it touching back up in here. And then we got that one. Okay, so with IWM, we got price action breaking, breaking the high of that down day. Hit an all time 1 year high. I don't know if it's an all time high. Maybe it is. It's probably an all time high, but it's definitely an annual high because this is 1 year. All right, hit a high here. So that is probably looking. It's definitely the opposite of a bad sign for the stock market going up. All right. So this is a 9 day X. This is a 9 day exponential moving average. This one is a 20 day. This is a 6 month simple. This is a 20 day simple. This 6 month simple. So right now we had a little bit of a pullback and we're testing to go back up. That's overall. In a way, it's like just how long is it going to take? I don't think the whole system is going to fall down today. Didn't fall down today. The market's closed right now. We're going to be falling down this week, although there are some shaky things going on in the world that have been going on in the world that sort of make it seem like how is this thing staying up? And that because might be because the fundamentals of the economy and the fundamentals of the stock market and prices of the stock market could be detached. If you are thinking that good economy equals good stock market and bad economy equals bad stock market, and vice versa, good stock market equals good economy, bad stock market equals bad economy. If you think that those two things are correlated that way, you could be mistaken. I'm not saying that you are, I'm saying that you could be. It's worth looking at to see if that premise is true. Is it worth having that belief? If you do have that belief, is it worth having it? I personally don't feel it's that valid of a belief for me. Well, since it's not that valid, for me, beliefs are either valid or they're not valid. That's what I'm trying to do. I'm trying to filter out anything that it's this wishy-washy type of belief where I'm holding it to be so true as a belief, but it's not true in 100% of context, and sometimes it's circumstantial. So then I can put it into something else, but take it out of belief. Hopefully that makes the bubbles market show, stock market show, exciting because I know a lot of people don't like hearing about that type of stuff. Uh, oh well, it's helping my thinking. Okay, SMH, we got make this go faster here, and all right. Let's skip that. Let's get over here. I want to show you this that I put together, hopefully in a nice, much more organized manner. I took my anything anything window and I changed it to one, and this is hopefully going to help out my one share gang that I'm putting together. People wanting to trade in one share because you might have limited money, or people that want to start a dividend portfolio with maybe some trading or just a dividend portfolio and still kind of have limited money and you do it in one share. That is one reason why I have, boom, these some of these fundamental metrics pulled up here with Coca-Cola, MO, and FCX. So that way we can look at some fundamental integrity of where are those three stocks, Coca-Cola, MO, and FCX right here. All right, so we have the Qs. This one, QQQI. This is interesting for monthly dividend income. I'm not going to go into a lot of detail on some of these dividend ones at the moment, but feel free to look them up because we will be talking about these. And I am actively building positions. Any of these stocks you can consider that I either have or I'm looking to put on or take off or in the middle of being in a position. These are stocks that I'm actively trading. And so, okay, so we see what's going on. We got the Qs over here. I have this one now because I'm shorting strangles on this. This is my go-to strategy for this stock, and in general, like my go-to strategy for income trades is short strangles where applicable. Sometimes you have to find the right stock for your brokerage size, and this stock is working for my brokerage size. And it is not a beginner friendly stock, but I decided to put it in the bubble show anyways to help people realize that over time, if you're just beginning, this is what you can work up to. That I didn't start just by short naked strangles on a roughly around $1,000 stock. That's not where I started. I started selling cash secured puts on stocks that I wanted to own at prices that I wanted to pay. And over time, getting good at that strategy allowed me to be able to get good at higher risk, higher reward, more lucrative type of trades. So that's why I'm going to keep that in there. XDTE, this one kind of goes in the category of this one, QQQI, but this is a weekly payer, not a monthly payer. Because it pays weekly, it's going to pay you 4 times a month. So in that regard, it is a monthly payer. But we will talk a little more about those. And here, BTCI. This one and this one are all three of these are ETFs, and these two are ETFs by the same company, Neos Funds. This one is by I slipping my mind. XDTE. The company is slipping my mind at the moment, so I'm just going to pass on that. And then we have this one over here. IBIT is a ETF. I think it's a BlackRock ETF of Bitcoin that it has a really developed, pretty good option chain, or a pretty developed option chain. It's way better to be option selling on this than this, even though this has it. But this is really good on the dividends. These three, these are some ETFs if you want to explore newer dividends that have come about because of regulation changes over the last couple of years, but relatively new. And when you compare risk to like how many years has an asset been doing something, the more years it's been doing it, the kind of easier it makes it to feel like that asset is going to continue doing that. So if you're looking at longevity, um, giving an indication of risk or lack of risk, these three don't really match up to these two or even these three, but these two are dividend kings. And then we got these over here that you could trade these in one share if you wanted to. I don't know so much about building up a long term like these. You can hold these to the bank. You can make a retirement account on these. In my opinion, these ones over here, some of them over here, they don't even have listed. Some of them might not even have listed statistics yet. They might not even have these financial numbers put in there. So I mean, I wouldn't feel comfortable holding something as an investment that isn't even showing any profit yet. It doesn't mean I don't want to trade it. It doesn't mean I might not take a speculative position in it. But there is a difference between a speculative position and an investment. And it's up to you as the individual and me as the individual to know the difference between the two and apply the right type of thinking to the right type of activity. If you want to invest, then you need to apply investing type of thinking to that activity. If you're starting to mix speculation type of thinking and thought process into making an investment decision, you might not get as good of outcome as you could have or you would like to. So you want to make sure the right type of thought process is going with the right type of brokerage activity. So we will be looking at those more, and I have to get to a Zoom meeting from meetup.com that I'm testing out, and I will send you guys the links to that later. All right, aloha.